Welcome back. Well, the market is holding on steady, no pressure there. So 18,950 has been comfortably held. A lot of momentum when it comes to the broader market. So let's in fact welcome on board Mr. Laksh Vaaman Sehgal, the director, as well as Kunal Malani, the CFO of Samvardhana Motherson International, joining us on the show to talk to us about the outlook. Hi, gentlemen. Thank you so much for making time and speaking with us. Laksh, I wanted to begin by you and ask about the overall environment that we are in for the auto anchors. There's a lot of focus which has come, especially on account of Prime Minister's visit to the United States, and now looks like major players like Tesla, etc., are looking at expanding their presence into India. What's your take as to what it means for the India ecosystem and the India OEM ecosystem?
Yeah, thanks for having me. I think it's an exciting time. As you see, India's hitting record numbers in terms of passenger vehicle sales last year, and we believe this momentum should continue. India is still a relatively underserved market. If you look at the car penetration ratios, we are still way lower than any of the countries where we should be for the size of the population that we have and the drive of infrastructure that the government is pushing. So we believe the outlook is quite bright. We are targeting much higher sales in the coming years, and with the push coming from the government and favorable policies, we believe a lot of car makers will come into the country. You're already seeing newer brands that have come in the last few years. So we believe this drive should continue. And from a business side, I think Motherson is fully equipped to serve all these new customers. It's quite an exciting time for us. We already do serve them in their local markets. As you know, we are present in 41 countries now. But our India presence is also quite substantial, and we can offer the entire portfolio of our products to all these new car manufacturers that would like to enter India.
So Laksh, give me a few more specifics. When you say higher growth, what could be that number? And have you onboarded any fresh clients, these global tie-ups, etc., in recent time, or are the conversations heading in the right direction?
Yeah, absolutely. We are crossing that 4 million car mark per year. If you look at other countries, we still can easily, double or triple up in the years to come. So it all depends on how favorable the entire environment and the conditions are. But I believe the growth should be at a very exciting pace. We are reaching inflection points where we are seeing that last year was probably one of the best years that we've had in a very long time, and this trend should continue. And we are already serving these customers that want to come in from the international markets. So we are pretty much present with all the mobility players that are already there, including the new age ones. And we believe this is an exciting market for them to target.
Kunal, clearly, last couple of quarters, I would say, was a bit difficult for manufacturing as a whole, because on the one hand, companies such as yours and groups such as yours, category, in fact, the entire category, I would say, because demand was slightly on the softer side, and all the material input prices, including freight, everything was actually rising, and there was a global disruption. Now things are normalizing at a very fast clip. How does it aid your margins or visibility on margins for the next couple of quarters? Raw material prices coming down, freight coming down, and demand rebounding. Kunal?
Look, as we have consistently been talking about, we are not a margin-focused company. We are an ROC-focused company. The way we see it play out clearly is our ROC should start improving. We are seeing, while the demand remains low, or I should say the demand remains pretty static, it is much lower than pre-COVID levels. But the premiumization effect is what really is driving us. As you've seen in the last few quarters, we've delivered record revenues. We see the trend continuing as it stands right now. So hence, we do not really see a concern around it. With also, the enough talks around recessions, etc., but with demand being anyway still 15-20% lower than pre-COVID levels, we do not see a likelihood of further decline from where it is. In fact, if you look at every projection going ahead, everyone is talking about a growth, albeit at a slow pace. But you add the premiumization effect, and that's a sizable bump up on the revenue stream itself, which has its own operating leverage benefits, better utilization for us, and hence an improved ROC. On the supply chain side, again, I think with things stabilizing, as you said, with freight rates coming down, with more importantly, I guess, with the comfort that you would get the products in time, as that starts building out, in a much more better way. We should see some of our working capital starts receding, and that should again help in improving ROEs. So hence directionally, over the next few years, we should continuously see an improvement in ROEs.
Vaman, I'd like to understand from you that there is a kind of two different things panning out in demand side. The areas which you operate in, some of the premium cars and the best brands globally, Audi, BMW, what have you. In fact, some of the even higher. We are seeing there is absolutely no impact on demand. In fact, demand is furiously coming back. Just for example, Germany is going through a difficult time, but Louis Vuitton stock is at all-time high because there is one section of the overall target market which is very agnostic to where the pricing etc. is, and a lot of your products actually pour into such brands as far as vehicles are concerned. What is the kind of conversation you're having with your top car makers right now globally?
Yeah, I can take that. Look, I think the customers are quite bullish on the forward growth rates. I think the last few years, the difficult period of COVID, etc., has also made people realize the importance of having a personal mobility option. And again, like I said, this new trend of EVs that is also coming is bringing a lot of exciting new products to the market. So I think overall, after a few tough years, there is enough demand and interest of consumers to go after these exciting products and have their personal mobility options. We did our entire capex for the growth that we were expecting in the early parts of 2020, 2021, which was obviously hit by COVID. We're seeing a lot of that pent-up demand is actually playing out. We also had the semiconductor issue, which created a lot of demand, which was pent up. So a lot of that is playing out. We're seeing a lot of consumers going for the high end, the more spec'd out options, more customization of their car, which all augurs really well for us. As Kunal was also talking about, how the preference is more towards the premium segment, people wanting larger cars, SUVs. All this is really helping us to drive more value content in our products. And definitely we see demand being strong at the moment. Definitely, this year should be much better than what we've had in the last few.
Vaman, in the world of automobiles, there's a lot of innovation happening to make the cars much more sturdier, but at the same time much more lighter. And EV also actually is actually moving in the direction. Is that inspiring you to become much more fitter? You seem to have shed a lot of weight yourself, running a lot these days, isn't it? Have you?
I am probably the same weight I've been for the last 10 years. Probably it's just the camera angle.
Okay.
Cameras are probably getting better, making us all look leaner.
I was just talking to Anisha and I was thinking, Vaman is looking very slim and trim. Perhaps he's worked on
I think you need to tell us what are those camera angle tricks. I can definitely use that on an everyday basis. So give me the notes on that one later.
Sure. Yesterday we were actually honored at the Buckingham Palace for getting an innovation award. One of our units here in the UK actually developed the mirrors. Our mirror unit here has developed mirrors which is much lighter, using much lesser components, and is more extremely friendly in terms of sustainability, which is obviously reducing the air drag coefficient and also increasing the mileage of the cars, because things are moving towards battery, like you rightfully said, and weight is a big focus. So alternative materials, all these things are becoming a lot more in focus. ESG, sustainability, recyclability, these are all trends that are playing out nicely in the market now, rightfully so. And the car makers are really wanting to drive this through in the newer products, and the consumers are preferring them. So I guess it's about time all of us were literally leaner and fitter.
Yeah, fingers crossed on that, and absolutely going to follow that. But just let me quickly wrap up the conversation on the business side, and we can take this offline then. Kunal, a quick word as far as the booked value is concerned of the business, because last time, if I have it right, the booked business value was $70 billion, with EVs forming 20% of the book. What's the updated number on that? And is the traction going to continue from wiring, harness and modules and polymer business?
So we will come back at the end of Q2. We look at it every half yearly, how our improvements on the order book is. Having said so, I think important to note that in the world we have a rate cycle happening. With the developed markets, obviously the rate cycle is looking a lot steeper, which is pretty much unheard of or hasn't happened for last many decades. So the weaker players have become weaker. Thankfully, we have kept our balance sheet strong, and that has enabled us then to be perceived as a much viable player in the longer term, and get a lion's share of new orders that's coming in. So as Vaman was mentioning, we remain very positively inclined on winning new orders and continuing our growth path toward 36 billion.
I was hoping to get some numbers out of the conversation, but nonetheless, I got some health tips at least. Thank you, gentlemen, for joining us today. A little short on time, otherwise would have loved to chat a bit more. But on that note, slipping into a very short break, don't go anywhere. When we come back, we'll speak with a lot more management and get you more stock ideas.